Hello everybody, welcome back to another valuation investing video, and today in this video I'm be going into Fiserv stock once again because everybody in the comments has been telling me to go over Fiserv stock, and I have been, but also the main reason is because looking at today's earnings they just released this morning, the stock is absolutely tanking. The biggest and worst day that this company has ever had. The stock is down nearly 40% in the morning. So let's take a look at Fiserv stock and see why it's actually tanking so much and see if we should be buying the stock after this huge dip in stock price. And as I said, taking a look at Fiserv stock here, the stock pre-market is down 38.5% after this recent earnings report. We're going to be getting into that earnings report and why it was actually so bad. The earnings report was definitely not good. So we need to be getting into that. And the stock is just tanking after in the morning bell. So when the stock market opens, we'll see what happens. Right now I'm making this before the market opens, so who knows what's going to happen, but the stock is down nearly 40%. And if you don't know what Fiserv does, they're basically kind of like a Visa and MasterCard, but a little bit more complicated. They connect more businesses to their banks, so they facilitate online transactions. So with that being said, if we go over to Fiserv, looking at the key financial highlights of this quarter three report, looking at this is terrible. They reported $2.04 versus an analyst expectation of $2.64. So this is very bad compared to analyst expectations. Also, taking a look at the revenue here, they reported $4.92 billion in revenue versus $5.35 billion in analyst expectations, and the organic revenue growth was 1%, slowing from 8%. So this is very terrible numbers here. Analysts were expecting at least high single digits revenue growth. They reported 1%. So that is also not good. Looking at this guidance, they also slashed their guidance by a huge amount. They revised their EPS guidance to $8.50 to $8.60. Looking at this from the prior outlook of $10.15 to $10.30 and analyst consensus of $10.16, so they slashed their guidance by almost 20% just with this recent quarter. That's why the stock's tanking. Also, organic revenue growth revised to only 4% growth. 4% when it was previously expected to be 10%. That is over a 50% cut in their revenue growth numbers. Taking a look at the segment performance, Merchant Solutions only 5% growth, Financial Solutions 3% growth. Just last quarter, and when I took a look at this stock just a few weeks ago, not even a week ago maybe, these numbers were almost 10%. The growth numbers were 10%. Everything was near double digits. Now it's in the low single digits as a response. So that is not looking good. So as a response, they're starting to take action and also change up the leadership. So if we take a look at this action plan Fiserv is trying to take in place, the company said it's enacting its One Fiserv action plan designed to prioritize and enhance client focus across 5 pillars. The first thing that they're going to be trying to do is operate with a client-first mindset to win new enterprise clients and grow average revenue per client. Also, they want to build the preeminent small business operating platform through Clover, which this is their biggest growing segment of the business. And obviously, with this very weak numbers that they just reported, this is where they're going to get that growth back. Also, create differentiated, innovative platforms in finance and commerce, including embedded finance and stablecoin. Then deliver operational excellence enabled by AI and employ disciplined capital allocation for the long term. And with that being said, I do think that Fiserv is in a very hard industry. This industry is very diluted, the fintech industry. So that is an interesting area, but I think if they can get this back into plan with today's stock price, if they can actually get back to where they were, we could see a very good rise. But also another big news from this company, they're actually changing its listing of its common stock to the NASDAQ from the NYSE. Why? I honestly have no clue. They're changing the symbol to FISV. So that's very interesting. I have no clue why they're doing this, but that's what they're doing. The company named this person, I'm not going to try and say the name because I'm going to mess that up. Fiserv's current COO of Technology and Merchant Solutions, and this person who most recently was CEO of Optum Financial Services as co-presidents effective December 1st. So they're changing the entire board of this company. Also, Paul Todd, who previously served as the Chief Financial Officer of Global Payments, was appointed CFO effective October 31st. The company also said Gordon Nixon, Celine Dufettel, and Gary Shedlin will join its board on January 1st, 2026. Nixon will become independent chairman, succeeding the current chairman, who will step down. Kevin Warren, currently audit committee chair, will also step down. So there's huge changes coming to this company with the whole board as a result of this terrible earnings report. So with that being said, take a look at marketdash.io to take a look at some strengths and weaknesses. Let's take a look at some strengths here. We have strategic acquisition expansion. This company kind of relies on acquisitions to grow, which isn't great, but at least they are acquiring companies to grow. Normally, I like to see more organic revenue growth, but they do acquire a decent amount of companies. Also, the Clover platform dominance is their best growing area, and that's very good for this company. But with that recent slowdown, it's not looking as good. Also, scale in merchant acquiring is pretty good for this company, and innovation with investments in AI, cybersecurity, and cloud banking. But some weaknesses is consumer spending slowdown, partnership dependency risks, which I don't like, how they're dependent on acquiring other companies to grow. That's not great. Acquisition integration challenges, also competitive pressures, and debt reliance. So there's a lot of debt with this company, and we'll be getting into that. And in my last video, I told you all, even though the valuation looks pretty attractive at the price of $120 some, the company just something with this company just puts me off in the fact with how much debt they have, number one. Number two, I don't like how this company is in a very competitive space. They don't really have a huge moat, and I just don't like how slow this company is decelerating their growth. And the main thing was the debt with this company. So if we go over to valuationinvesting.money, want to go check out the website, link is in the description. If we go ahead and take a look at, let's put in Fiserv stock here, let's analyze the stock. So taking a look at Fiserv here, if we scroll down, the market cap is at $68.59 billion, but that's going to be reduced down to $40 billion or less once the market opens. So that's going to be a huge decrease. The free cash flow yield is going to have a huge spike in the amount of money we're getting for how much we pay for the stock. So the free cash flow will go higher. The thing is, looking at the net balance, this is where I was scared. This is why I did not buy this company. Even though the valuation looked good, even though the fundamentals look okay, it's not great. Don't get me wrong. Not a great fundamental company. And especially after this recent earnings, it doesn't look good. But this is my biggest thing that I didn't invest in this company. Net cash is negative $28.7 billion. They have almost $30 billion in debt. That's almost half their market cap. That almost immediately scared me off. I don't care if the valuation looks good. That scares me with how much debt they have. Taking a look at the fundamentals here, we get 5 out of the 7 key metrics. The forward P ratio very low, so that's a good. Their valuation is very low. Return on invested capital 4%. That's not good. Also, the debt to free cash flow is also not good at almost 7. So these are the two X's. Doesn't look great for this company. They're buying back a lot of shares though, so at least they're returning some to investors. But now those shares they just bought back are even doing worse because the stock is tanking. So it's not looking good. So going over to my intrinsic value calculator here, I'm going to put 3% revenue growth for the bear case. They said they're going to be growing at about 4% for the next year. So I think 3% for bear case is good. 5%, let's do 4.5% base case. Then bullish case, let's do 6%. They could potentially get higher than this, but with this recent earnings, it's going to be a pretty struggle to get back to where they were. Now for the future profit margin, right now their profit margin's at 16%. So if I put a profit margin, say 13 bear case, base case 15, bullish case 17, I think the profit margin is going to slightly decrease over time, maybe a little bit, or stay about the same. Now for the future P ratio, I believe a company growing 3% deserves a P ratio of 10. Base case, I'm going to put a P ratio let's do 13. Bullish case, let's do 16. Now for the shares outstanding, I think they're going to be buying back very fast. Let's do 3%, 4%, and 5% for these cases. Now if we calculate the intrinsic values here, we are going to get very bad returns from the price it is today. So keep that in mind. But if we take a look at the base case, a target price for 10% return is going to be about $70. Right now, before the markets open, it's at about $75, so it's not too far away from the 10% return. But me personally, like I said, I don't like how this company has a lot of competition. I don't like how they're reliant on acquiring other companies, and I really don't like the amount of debt that this company has. That's why in my last few videos, even though I had great returns for this company, just because you input assumptions and have great returns doesn't mean you should just buy it immediately. You have to take a deeper look into the company. And with that being said, me personally, I'm not buying this company. I'm staying away for a bit. The debt just scares me way too much, especially, and the slow revenue growth numbers is really worrying to me. So that's why I've been staying away from this company. And this isn't financial advice, but that's why I personally haven't bought this company at all. And I'm still staying away after this earnings. So thank you guys for watching this video on Fiserv earnings. Please subscribe, hit the like button, comment down below. If you want to go check out the Patreon, click right here. And thank you guys. See ya.